And thank you for attending this last session. Thank you for your patience as well. We'll try to make up the time as we go along. For the ones who are attending today for the first time, I'd like to remind you on how to download, or rather tell you how to download the app. We have voting sessions. So for those of you who haven't done it yet, if you could kindly go to www.eventmobi.com/MMS. Insert your email address and followed by your own personal password. For those using an iPhone, press the download button at the bottom of the screen and then add to home screen. For Android users, there's the More button, right upper corner, then add shortcut on home screen. During the sessions, you'll be asked to vote according to the question being placed by the moderator. We'd also like to thank again the sponsors of this Malta Maritime Summit, in particular, obviously, the Ministry of Transport and Transport Malta and all the other sponsors. We're proud to say that all speakers have been selected on their integrity and there's no connection with sponsorship. So we are very, very grateful to the sponsors who have voluntarily elected to support this event. I would now like to start today's session by introducing Professor Merikas, who will be hosting two prominent gentlemen who I will leave the introduction to him. It's slightly different. We've got In Conversation With, and it's going to be hosted by Professor Merikas. Thank you very much. I have to apologize. My apologies. We were going to have Minister Scicluna addressing us today. Unfortunately, he has had to travel, but he has very, very kindly prepared a video message for us. So we'll start with the message from Minister Scicluna, and then Professor Merikas will host the next session, with apologies. Thank you.
Good morning, distinguished guests, ladies and gentlemen. I take the opportunity to thank the organizers of this Maritime Summit, including Mr. John Gauci-Maistre, who worked so hard for this to succeed. It's not an easy time. The financial crisis is still being felt today. It brought about a big disaster in the financial field. We're just still hearing of bad news in the banking sectors. It affected the economy badly, and worse, governments who tried to bail out the banks, and as a result finished up needing a bailout themselves. The big debts and the policy measures aimed at reducing them, we can see that as well there we could have done better. Comparing the EU with the United States, we find that we have lagged behind. There are a lot of lessons to be learned. However, we find ourselves now with a spate of regulations, financial regulations, and regulations, both also against anti-money laundering. Together, this cocktail now is proving quite challenging for any sector, including the shipping sector, where the availability of credit, the opening of bank accounts is becoming very challenging. On top of that, now we're facing a new shifting of the landscape in the area of taxation. As a result of the OECD initiative, which is called BEPS, and also the reaction of the EU to various news which has shocked some people of big familiar companies, the Google, Starbucks, Apple, and so on, whom we know they are big companies, and the news that they pay little or no tax. That has prompted the legislators to take action. And now here we have to be careful where we stand, because the media very easily takes all this and hypes it up. Let's talk about my own country. My own country, we have, not now, but quite way back in the early 90s, we have removed banking secrecy. We did not wait for this development because we thought our country wants to maintain its reputation by exchanging information with other governments according to agreements we have reached with them. In the area of anti-money laundering, we have set up an institution and a spate of legislation which is aimed to deter criminal activity. However, when it comes to taxation, we believe that is the remit and for each country to decide its own rate of taxation and also uses that for reasons of competitiveness. So there's nothing that we want to feel embarrassed. We believe taxation, if the country so decides, will be used for competitiveness purposes, where we would be able to cooperate with other countries and also are against is of companies who uses artificial entities in certain countries where they don't have any economic activity in order to reduce the even legal tax exposure. So Malta has consented to the anti-tax avoidance directive of the EU. We cooperate with other countries to deter this blatant tax avoidance or evasion. However, we maintain that taxation will continue remaining an instrument to be used by the country for competitiveness purposes. We also believe that a country is competitive not just because of its taxation. The language which is used, its location, and also the support services and the history and the cluster of that industry. So we believe that Malta is and will remain competitive because there is an effort by its people to continue being competitive. All in all, I believe these are important points for discussion, and I'm very glad that today's program will be tackling them. Well, I wish you luck.
Okay. This one forward. Good morning, ladies and gentlemen. I'm Andreas Merikas, and I have the honor to moderate in a way to lead the panel that is ahead of us. First Malta Maritime Summit. I want to really thank the organizer because if we think for a moment that the first Malta Maritime Summit, because the organizer put a lot of trust and actually they honor my colleagues, Mr. Gourdomichalis and Mr. Dallas and myself, to lead this session that basically is a very pragmatic, a very real issue today. And we are here to share with you our views towards going forward. First, Malta Maritime Summit. I have participated in several summits and conferences, but I do believe for Malta to undertake this summit is very crucial, is very important, and not just simply say that, just let's think for a moment the geographic location of Malta. Very important. I believe either is or the destiny will be, if I may to express an opinion, to be a maritime nation. So this summit today is very important, very important. For this, for the trust and the honor, thanks very much the organizer, in particular to Mr. John Gauci-Maistre. The way we are going to approach and the discussion ahead of us will be very realistic, very realistic. And on this, of course, I cannot do it myself. I rely heavily on my colleagues. The structure of the program, first of all, has two sessions. One, I will say, corporate session. What can we do as ship owners, as ship managers? What can we do in order to cope with the problem? Because yes, there is a real problem ahead of us. So on session A, we'll identify the problem. We try to reason why we are in the stage we are, and of course we may be wrong. So here we are. Allow me to use my other profession as a professor. I may ask questions to the audience. All right? Then, if you agree with the identification of the problem, we are going to share with you what do we think needs to be done inside the company. And if we don't solve the problem inside the company, we're going to go outside the company. And there, of course, money. And if somebody give us money, who is going to realign the conflict of interest? Issues of corporate governance. And then we have another stakeholder who asks money for, and that's the state. What is our approach and your thoughts on the third stakeholder? Because as we all know, stakeholders are the employees, are the suppliers, the people we are doing business with, the capital providers, and then we have the state. That's the overall structure. My colleagues, Mr. Stathis Gourdomichalis, Mr. Jason Dallas, and myself. Mr. Gourdomichalis is a ship owner, is a shipping person by origin, by definition. He born to be a shipping person because of his roots, of his family roots. Mr. Jason is on the other side. Vessels, yes. Vessels to manage, yes. But where is the money? So the complementary issue of shipping, of course, is the money. So we are going to capitalize on Mr. Jason to share with us his views. Allow me to read very briefly about Stathis. As I mentioned, comes from a traditional Greek shipping family, began his shipping career back in 90s. He did a variety of things around shipping. He was a CEO of a listed company. Along with his brother, own a fleet of about 10 vessels. The investors are private investors and institutionals. And I would say I would rely heavily on Stathis to tell us all about the shipping from the side of the ownership and the management. When we go around these issues, we go to Jason Dallas. Jason Dallas, he started his career at the trading section of ship management. Then he concentrated primarily on the finance side. He held various responsible positions as a head of Piraeus Bank on the shipping division, about 15 years. He was the head of a shipping portfolio and restructuring of this. And currently, he is the co-head of a shipping division of Alcimos, a very specialized private equity advisor firm in Athens. Jason, thank you. Stathis, thank you. Here we are. Shipping. What is shipping and what is important? Just by nature, God made the continent separate by oceans. Without shipping, as they say, half of the world will be hungry, and half of the world will be freezing. One thing I want to mention, that we're talking about globalization, and we're talking about international finance, and we're talking about international markets. I can assure you, in order to have financial transactions, in order to have financial interactions, underneath should be a physical transaction. Without shipping, the picture can show to us, can prove to us, nothing can be done. So shipping is human nature. That's the nature. That's where we're born with. Okay? And somewhere there, you are going to locate the very critical geographic location of Malta. So the organizers thinking that we need to establish a maritime forum in Malta, I think is needed, is not just another conference, covers needs. So wishing you success on this one and others to follow. Allow me to say and share the difficulties of the first First Maritime, first is signaling. He has a lot of difficulties. So congratulations for the outcome. Okay. What is the problem and why we are here? The critical problem of the times is that we have a business concentrated on the shipping industry that the money that generates is negative. In other words, who runs this business, due to market condition, has to cope with, how can I say, keep it simple, very difficult problem, operating cash flow negative. Meaning, gotta manage suppliers, gotta manage crew, and after that, gotta manage the bankers, gotta manage the capital providers. So here we have the shipping entrepreneur to deal with such a problem. And of course, very moderately, we say that our colleagues, Stathis and Jason and myself, do we have a solution? We will try. And of course, we will ask your opinion and your criticism. So, revenues cannot cover expenses. Right there, let's stop. One picture, 100 words. Look at the end. The inflow to a shipping company is between 5,000 and 7,000. The inflow. The outflow starts from 5 up to 10, 11. So right there, the shipping entrepreneur is in red. Now, of course, the revenue, the freight rate, is the interaction demand and supply, okay? And of course, I don't want to get into this. The peculiarities of the shipping is, allow me to say that I don't want to say the most, but I would say one of the most competitive industries. In other words, the impact of the ship owner, of the ship entrepreneur on pricing is very limited. And in academics, we say price takers. So here it is. The market gives you this money. How can you impact on this? Limited. So now all your problem is yours. Just solve your problems. Now things are becoming very tough. Okay? And if the money coming in are short, is demand issue or supply issue? Because in order to cope with a problem, we've got to pinpoint the reasons of the problems. So, question one, lack of demand or excess supply? The common approach is, well, there is no demand. World is not doing well. However, the numbers shows differently. Yes, there is demand. In other words, people are asking for shipping services and they pay money. However, they pay little money. What is going on? Here it is. Let's concentrate for a moment. Vessels available, vessels coming in from shipyards, vessels coming out. Simple the supply. And there, the blue bar is amount of vessels coming in. The green bar is amount of vessels coming out. So here we have the two ends of the life cycle of a vessel. Vessel coming in, shipyards, and vessel coming out, demolition. Okay? However, you see the yellow line is above the zero, meaning that more vessels coming in the waters than vessels coming out. Here is, I think, we pinpoint the problem. More vessels available for the demand in goods. I believe this is a problem. This is the reason of the problem, and you can challenge if you wish. One main response to this excess supply, you can challenge. We are trying to cope with the problem, and that's what we think. Okay? That's a little history, what happened in the shipping world, and how come an event in Libya, an event in Suez, an event globally affects shipping. So yes, at the beginning I stressed international trade, international finance, globalization, long ago before we discovered and be a kind of a modern expression. Globalization since ancient Greeks and Phoenicians. Okay. And here we are to my colleagues and friends. And asking questions which I'm coping and I don't really know. So for a structure, we are going to look remedies inside the company, remedies outside the company, and if we go out, we have institutions, and if we have institutions, we have taxations. That's the structure. So, Stathis?
Participants. It has been a great 2-3 days in Malta, and we are already looking forward to come back in 2 years. Before we start discussing your questions, if you allow me to just read the few words which I noted yesterday during the conference, and I always try to make this point when people are listening. So what I wanted to say is that shipping is the safest and most environmentally friendly mode of transportation of commodities and even finished goods. The last 2 days, 3 days, we have listened to many distinguished panelists presenting new ideas on innovation for ships and ports. We are an industry that constantly thrives to improve itself. We thrive to become more efficient. We thrive to pollute less while provide the first-class service to our clients. We do this even today within a terrible freight rate market while losing huge amounts of money every day. We invest in research and development. We build innovative ships, and we constantly upgrade our older ships. We have conferences like this one, and we all put together our minds to find ways to better ourselves. Our customers, the charterers, the traders, the buyers of commodities, the distributors of end products, all enjoy our good services and our innovations. The big question is, does the end user understand this? Do they know this? This is something that all of us and conferences like this should focus on. We need to increase the awareness of the end user that shipping is not a lucrative tax-free way of entrepreneurship without respect for the environment. Shipping is the most efficient way of transporting goods throughout the globe. World trade is completely dependent on shipping. All stakeholders in shipping constantly endeavor to improve their services in ways to protect the environment and deliver in a cost-effective goods throughout the planet. I kindly ask all of you to always remember this and try to make it your priority to make the end user understand this. We need to make sure that the general public understands this. I kindly ask this beautiful country of Malta, a traditional maritime nation, I would say, given the opportunity that they will take over the EU presidency, to also utilize this opportunity to increase awareness of the general public about what shipping really is. Now, let's get back to the nitty-gritty. Although I do agree with you that supply is, and it certainly was the major problem that created this very low freight market, especially in the dry market where I am specializing. It started, I guess, in 2007, 6, 8, where the market was extremely high, unprecedented freight rates, and all us ship owners got carried away, I guess, and we started ordering new building vessels. Chinese shipyards were very happy. They were partying on also, and they were coming to us selling their services, and we were buying their services. Of course, the market collapsed at the end of 2008, along with the financial crisis, and then all the problems started. However, in 2013, we all thought that the market had bottomed out. A lot of private equity, hedge fund money came into shipping, even more orders. 2012, 13, 14, we had more orders. Again, creating this supply problem. I do believe, and I think it was kind of evident in your graph, that this is slowly tapering off. New orders are very, very few. Shipyards are actually going bankrupt. Chinese shipyards are much, much less today than a year ago. Even Korean shipyards, South Korean shipyards are closing down. There's a lot of M&A. I was reading last week about China Shipyard Group, state-owned, one of the large state-owned groups, probably merging with Costco and creating, so they're trying to find economies of scale. They're closing down, they're merging. Scrapping has been excellent for the past years. Recently, it has slowed down a bit. However, this, what I call a self-correcting mechanism in shipping, has done its work. Hopefully, it will continue to do so. We need some more scrapping. We've listened yesterday and the day before that from the GMS people how many thousands of ships you have scrapped, hundreds in the past couple of years. So that's working. It has always worked. It's a fundamental mechanism of correction in shipping. My big problem, and unfortunately I cannot predict, I do not have the means to do so, is demand. And that is what scares me more, to be honest with you. Seaborne trade has always been around. It will continue to be around. Has always, almost with the exception of a couple of years right after the financial crisis, has always increased year to year. But still, you know, the Chinese question mark is out there, and I cannot have a real opinion about that. So I'm afraid of that.
Now, being as a shipping entrepreneur and facing the problem that the money you generate are less than the money you gotta have outflow.
Yeah.
In other words, inflow money is less than the outflow money. What you will do?
Well, we will get into details of ship management. And it has always been my strong belief that if you are not a strong ship manager and don't really understand the nitty-gritty of the business, you should not be investing in this industry. So one, you know, closes the office's doors and starts looking at how the business is done, how the daily operations are done, and starts trying to minimize costs. So that's the first thing one does. Costs for ships are the operating expenses that can be controlled. Unfortunately or fortunately, the largest operating expense is the crew expense. So there's not much you can do there. I guess somebody could change the nationality of the crew members and go to a nation where salaries are lower. But that would create a low-quality crew, probably, and that could create problems with the ship. So same with repairs and maintenance. That's another very large percentage of operating expenses. So when you start playing with that, you enter a danger zone.
Yeah.
You can do it up to a point. Again, going back to expertise in management, very important, because you can start making huge mistakes. You may.
Simple question. We all agree that the major components are repairs and maintenance and crew.
Yeah, and insurance. Those are the three.
Yeah, on the third one.
But insurance, you can't really do a lot.
Nothing you can do, basically,
really.
or you can
have a good
shop
record.
around.
You can shop around, you can have a good record and get good rates. But
Okay. ITF, non-ITF crew.
we used to have ITF wages for many years. We have stopped that.
Thank
There is
you.
no reason for that.
There is no reason.
In our opinion.
So basically, if you allow me, you are
But
not...
that does not mean necessarily that the crew wages are very low, right?
Definitely with you. So
The thing is, we do not have an agreement with
the
the
clarification what I want to make, there is a perception, question mark. ITF crew is better quality than non-ITF crew.
I don't understand that.
You don't agree?
I don't understand it.
You don't understand?
ITF is
Okay.
a
Now,
union.
when the vessel, a union,
whether you have
unionized labor or
no,
not,
not
makes no difference.
quality crew means quality crew.
Quality crew.
Well trained, experienced, well paid. Happy.
Okay. Now, question two. If your vessel goes to Europe,
Yeah,
to Malta,
yeah.
is your vessel will have problem with a non-ITF crew?
Absolutely not. Our vessels
Absolutely.
are constantly in Europe, in the US,
Okay.
in Australia.
We
everywhere.
agree.
If one of the crew members, for whatever reason, decides to go to the ITF and create a problem, then the ITF will try to create problems to you, will try to create secondary action, which is illegal in most
Okay.
countries, et cetera, et
Okay.
cetera. But
Okay. Okay. So basically, you come around from the variable cost, bunkering, more or less, it depends market conditions.
Can't do anything about that.
You cannot do anything, and depends from your vessel. All right? So basically, let's keep this, that the tool is the fixed cost of running the vessel, right?
the tool for minimizing expenses is yes, trying to minimize operating expenses. The
Okay.
problem here, this is a danger. There is a danger zone. You may create a spiral effect because you may have a lower quality crew, which will, or minimize expenses in maintenance. All this might mean that you create a technical problem to your vessel, which you will pay dearly later. Or you will lower the resale value of the vessel. Or you will have your customers, your charterers, unhappy because you will not perform. So at the end, this will create lower income. So this is a balancing act.
However, there is a misconception that, primarily when the investor investing in a vessel, and of course, the other question is, who's going to manage the vessel? Mm-hmm. And here, there is a conflict. In-house management, third-party management. And now, let me address a specific question and help me how to evaluate. I'm a ship owner, However, I don't have my own ship management firm. So I'm looking outside, and thank God, there are a lot of third-party managements. Okay, and here a ship manager is coming in and says, you know, Stathis gave you 4,000 per day. Okay? I will provide the same quality of shipping services, but 3,500 per day. And Jason is coming and saying, no, I'm going to bid both of them. I go to 50. And of course, who wants to pay $100, $150 per day in addition? I will go with the less expensive. Do you agree on this or not?
Absolutely not, no. Well, first of all, if you own, because you use the example that you own a ship but do not manage it.
Yes.
So in my mind, you are a shipping investor. You are not a ship owner. A ship owner needs to be a ship manager, in my mind.
Okay.
So definitely not the cheapest is not the best. That is definitely not a reality in shipping. Listen, I consider myself a ship manager. So I would never trust a third-party manager to manage our ships. That's what we do. This is what we believe is our expertise. This is what we believe we know how to do. Obviously, especially in the recent years, there's been a lot of money coming into shipping from financial institutions and funds, etc.
Exactly.
I guess that money, those investments need to be managed by somebody. Absolutely, yes. But ship management,
so of course, as you understand, you're going now. You are identify, if I follow you well, a conflict of interest.
A potential conflict of interest, absolutely. I think this is something we're going to talk about in the
yes, but
session
this
too.
but this is basically a
yes.
huge agency cost.
Yes.
Okay, that can destroy the investment itself.
I definitely believe that ship management should not be a profit center.
Okay.
Should be a cost center, and it should be a cost center for the owner of the ship.
Okay.
Full stop.
Jason, if you see, you have capital providers, and they're coming with a project, and they say, you know, look, that's a great, even though shipping is not doing well, however, don't generalize. There are unique market opportunities that we all know, and here is a contract. Here is a project. I need a ship. I need 3 ships. I need 4 ships. Are you going to consider who is going to manage the vessels?
First of all, good morning from me as well. Thank you very much for having me here. It's a very good question. When I used to be in a bank, one of the major things we used to look at is who's going to be the manager of the vessel. It's very important to know an asset which is quite highly, have a quite high value, travels all over the world at some destinations which are not very friendly, I should say. And you want to know that this asset is well managed. It's traveling all over the world, at difficult places.
I tell you what.
It's very important
The
to know
same project, let's say myself and another competitor, we have same access on the same opportunity, I would say. And we're coming to you as a financier. And I'm asking your money. Of course, I'm going to put my contribution. And of course, I will manage the vessels. Okay? So in other words, manager and partial owner is one person. On the other hand, capital provider is one person, manager is another person. Same project. Are you going to give money to me or to the other person?
Well, ideally, a financier would like to give money to both. But if you had to choose between the two, I think you would find that where the interests are more aligned, you would be inclined to favor that more.
Yeah.
Because the person who has put the money in and is managing the vessel is more keen to see the project come through.
Okay.
But you touched on an issue which I think is quite important, and looking at other industries as well, like the hotel industry and the aviation industry, We have seen a trend many years now, which we haven't seen in shipping. There's a separation between owning and investing in shipping and management. Hilton doesn't own any more hotels. It's just a brand name, and they just run the hotels. The assets are owned by investors. Same thing with aviation, airplanes. BA used to have their own airplanes. Now they're just managing the brand. So it's something which one should think really hard about, because we might see this trend happening in shipping. Although shipping has its own peculiarities, it does share similar issues with other asset classes which we've seen this separation. So we might see this trend coming in the future years. That's one thing I thought just to put. I think that Stathis totally disagrees with me, but we've actually seen this trend.
There's no branding in shipping.
There's no branding in shipping, yes, but it's a capital-intensive industry.
Yes.
And as you know better than me, you have investors, private equity investors investing in your company. So there are people out there who want the volatility of shipping. They want to invest in shipping. Mm-hmm. They're not managers. And as you identified before, there may be some issues of agency issues. So there might be a need at some stage where you have all these people who want to invest in, because it's a capital-intensive industry, need the capital, having separated that from management. So up till today, because being a banker, we gave out lots of cheap money to ship owners, and it was very cheap.
That was the old ages.
That was the old ages. Now you don't have that flow, that financial flow from financing. So you will have investors, and you might have other class of investors as well. You might have hedge funds, which you had, but you might have pension funds, you might have insurance company potentially entering in the market, and you might need more of third-party management and sort of more transparency in the management that you really had up to now.
I
so
think,
there might be a trend there.
allow me to say, that's the key word.
Yeah.
Transparency. Yeah. And of course, you know, the managers, is anybody ship manager here? As a third party? Okay, let me be very, very, very careful.
No, he doesn't mind.
It's a tough job.
Okay, the ship managers found a new expression, which I learned recently. Ship management as a lump sum or at a cost. And here I am, a capital provider, and I'm coping with this issue. Lump sum, ship management, as Stathis said, becomes a profit center. Lump sum. At cost, I cannot see the cost. That's an issue.
Yes, but may I just give some justice to third-party managers? This is what they do. This is their profession. So they have to make some money.
I agree.
Absolutely.
But they have the fees.
Wait. What Jason said, and you noted, transparency and corporate governance, which we're going to again discuss in session 2, are extremely important. And although I disagree with Jason about this large consolidation and third-party management possibilities, I do agree with him that, yes, capital providers and hedge funds and people who don't know anything about shipping are investing in shipping. They should be part of the cost center.
Exactly.
I don't mean, I'm not expecting them to manage, but I'm expecting them to pay the costs with full transparency. I can give an example. We have some funds investing in our ship-owning activities. Our management company is not owned by that company. However, every single dollar of profit, if there is profit, goes back to the holding company. So last year, we returned roughly $500,000 US to the vessels. Because, you know, it just so happened we had profits. Why did we do that? We overestimated or underestimated our management fee and others. Of course, we were not charging 1% sale and purchase commission. Of course, we're not charging huge management fees, et cetera, et cetera, et cetera. And we have our books audited and presented to our board of directors. And every single penny of profits goes back to the company. Okay. Why do we keep it outside? Because ideally, it should be owned by the investors also, ideally. We do it for liability reasons, their liability reasons, not ours. We are protecting them.
Exactly, exactly.
But you
See,
must-
I believe here is an issue that we need to think either capital providers, either manager or academicians. That's an issue which right now, I don't think we have a clear picture. I mean, there is merit, there are merits, what you're saying, Stathis merits, but I don't think we have a clear picture. So that remain open. You do all these things, Stathis, but
Still losing money.
no money.
Yeah.
Are you going to lay up the vessel?
Easy answer is no, but it's qualified. We specialize in smaller ships, handies up to maximum supramax. For these ships, it never, not never, but over this past crisis, it never made sense to lay them up. I guess for larger ships, Cape sizes in particular, it did make sense at some point to lay them up. But it's plain mathematics. If you lay up a vessel, you lose your income, and you save your operating expenses. You can either hot lay up or cold lay up. Cold lay up, everything is switched off. There's no expense. So you have a watchman, and there's no expense. So you only lose your income, and you save all your operating expenses. In our segment, our income, our operating expenses is around 5,000 a day, call it. So in order to start thinking of laying up, you have lower income. So if it's 4,000, you're missing 4, you're saving 5, that's 1,000 a day for cold layup. Cold layup to reactivate the ship is going to cost you at least 200,000, I'm guessing. I'm not sure, but that's pretty much the number. That means that you need at least a year, roughly, for it to make sense. We never made this decision, this past crisis. It didn't make sense. For larger ships, it probably made sense at some point.
Because you see,
when it's marginal, when
Exactly.
the losses are marginal, it doesn't make sense to lay up.
I agree with you. It's a matter of calculations, and the higher basically is inflow versus fixed cost.
Yeah.
Okay.
And sorry, you have the problem of your bank. If your vessel is financed, you need your bank to agree on a layup, and you need to get a holiday, I guess, for all payments, because you will have no income. And we haven't started discussing that.
To begin with, I believe there is, to my understanding, is a misconception because, and gladly that you brought it up, because here clarifies one issue, because the conventional thought is lay up, zero fixed cost, or next to zero. However, this is not the case. It's a matter of differentials, okay? So needs very careful calculations. What is at stake? Because if at stake is 1,000 per day, then if you lay up for 6 months, and then you need $500,000 to reactivate, and then classes and all these things, right here is...
You've lost. Wrong decision.
Wrong decision. You're going to spend $500,000 in order to get 180,000. So you pay $500,000 in order for 180,000. However, it's something conventional is picking up in conversations.
Absolutely.
But we need to be very careful and to make sure what is the target, what number we are targeting.
Correct. Our investors asked us a year
let me
ago.
ask you this. Here, you go to Jason and say, look, because he has a mortgage on it. Say, look, I'm thinking for lay up the vessel. Based on your experience, the banker is going to say, yeah, go ahead, or?
I don't have experience with this. We have never asked the banker to lay up a vessel.
Okay.
I think Jason is better versed to answer this, but I don't have the experience. I'm
Jason?
sure it's a very difficult discussion.
To be honest, it has never happened to me as well, because I think generally Greek ship owners are the ones who try the most to
We like the propeller to move.
Yeah, Greek ship owners like the propeller to move and do their best to earn as much as they can.
Let me ask.
But from discussions I have with other shipping bankers, they've had this proposal of having ships lay up, and I think each case is different. If you have a company which has quite a number of vessels and some are laid up, and then you have a cash flow, and you can meet at least interest payments, because the minimum you can actually, the bank can allow as interest payments. So if there's a justified scenario, there's cash flow within the group and the company, and it does really make sense in numbers, and you prove to your banker that, look, numbers make sense. Banks have been looking at in a positive way, as long as the owner, by some means, either putting his hand in the pocket or from cash flow from other vessels, meets at least interest payments, and the asset is quite young, so there is life after you reactivate the vessel.
You need to have some visibility.
Yeah, you have to
That's a very good point. So you can see cash flows ahead of you.
At some point, because you need to have that.
Can I address the question to the audience? Yes, sir.
It's coming.
It's coming. On your right.
A loud voice anyhow. My name is Francesco Bentivegna. I'm an oil and gas lawyer and arbitrator from London. One simple question, considering the time that we have probably. Having heard that the state of the industry is not very healthy, negative cash flow, I would like to know, please, how much and how important is the transportation of oil and gas by tankers, mostly? There are some positive signals. Last week in London, there was the first shipping of shale gas from the States. How important it is, and how is the state of this industry, considering that the state of the oil market is on the brink of collapse since 2014? Thank you.
With all the respect, can I postpone open up this question at the end of our session? Do you allow? Okay. So, the lady.
Good morning. I would like to talk about the laid-up. Actually, I am at the moment restarting an laid-up that has been laid up for 10 months. It was decided to laid up because they didn't have enough cargo. So all the contracts were passed to the sister ship, and they decided to laid up the older ship. The older ship did not have a mortgage, but it have a collateral, and nothing has to be paid. At the moment, we are in the process of starting. It will start in about 2 weeks' time. We have found some cargo. It's not going to cost $200,000 to restart the ship. We're just paying the taxes. We are activating all the technical certificate, and the crew will be there in 2 weeks. So I think sometimes it's sad because they took that decision in January, but sometimes it's the best because it has been 10 months that they have been saving money having the vessel like that.
So you lay up the vessel in January?
Yes.
And you reactivate now?
Yes.
9 months.
10 months.
10 months.
More than 200 or less?
I can say.
Okay.
Well,
Okay.
I guess the cost depends on the type and the size of the vessel as well.
Yeah,
So
and
Stathis was just
as Jason said,
generalizing here.
Panamax bulk carrier.
and as Jason said, and it depends the visibility of cash flows ahead. Let's say the age of the vessel, basically.
Well, it's not a young lady.
Excuse me?
It's not a young lady.
Not a young lady.
Another young lady.
Oh, it's okay. Okay.
Was she laid up in close to here geographically, or
Coal.
yeah, cold?
Coal laid up. No,
in
no,
Asia or in close to Europe?
I
or?
cannot tell you. I cannot tell you. But
Yeah, because there we have another competition among the anchorages. Because, of course, lay up, I mean, parking space, you got to pay. Okay? And if you leave the vessel there, how about security issues? So,
there was no crew on board,
okay.
only
Just a watchman.
security. Thank you.
So I guess now the two questions that were integrated, layup or not, and what are the parameters, what the parameters for the right decision. And as Jason pointed out, Stathis said, I agree with you that the point is not the amount of fixed cost, but the differential basically that you realize. And of course, another important consideration is mortgage or not, free of debt or not, okay? And of course, the lady has more degrees of freedom to decide because if I follow you well, no mortgage, right?
No mortgage.
Oh, okay. So, third party.
You want an answer?
We have managers here.
I think it's clear what you're going to say.
A blessing or curse? I think let's skip it. Okay? You rather have your own ship management.
Yeah. But that's what I do. So,
Okay,
but, you know.
yeah, I understand. And Jason said, yes, but precondition, transparency.
Definitely.
Transparency. Any comment on this? Yes, sir.
Good morning, Richard Greiner from Moore Stevens. A couple of very small observations and then a question related to this topic now. Firstly, on the operating costs, as many of you know, we do an annual benchmarking study, and the good news about that
Coming
is...
out in 10 days.
Yes.
5 days.
Yeah, and
Looking forward to that.
the
Of course.
the overall operating costs within the shipping industry across the space have been falling in each of the last 4 years, which I think is reflective of the very hard work that all across the industry have been doing. The second comment is sort of maybe observational regarding layup. I think it does very much depend on the different sectors. Clearly, in the container ship space, often layup is a solution in order to sort of adjust for the significant variations in demand for shipping containers. And if you sort of look a bit wider across the oil and gas space, clearly in the last 2 years, there's been a huge amount of tonnage laid up in anchor handlers, PSVs and the such like, responding to the fall in the oil price 2 years ago. But the question I had, really, there were just a couple of observations, as I said. The question I had was towards the panel regarding this question of efficiency of ship management. I suppose in simple terms, my question is, does size matter? The question being not so much about the outsourcing of ship management to a third party, but exactly where you should position yourself in terms of the number of vessels you have within your fleet. Because I would suggest, arguably, if you have a fleet of a handful of ships, you are not operating at an optimal level of efficiency. And I think that answer probably does vary sector by sector as well. But I'd just be interested in observations in that area. Thank you.
Okay. May I?
Yeah, please.
I think it's a very important question and one to be answered, and you know, we should think about this, all of us. Size does matter, absolutely, despite what some people say. I think there is a minimum size. So, you know, managing 2, 3, 4, 5 vessels cannot be very efficient. On the other hand, becoming huge is also not efficient, in my opinion. It also depends on your management style. For example, we believe that we are specialists in this. So both my brother and myself, the two partners in the company, want to be an integral part of the management of each ship and be part of every decision. That means that we would never be able to manage 100 ships in this way. So the way we want to do it, which is not the way everybody should do it, I think that a minimum size of over 8, 10 ships, and the maximum size of 30 ships, if we want to continue managing the way we are. If you have a more corporate way of managing and top management is not involved in every decision, then yes, bigger is better. You will get economies of scale in purchasing, you would get economies of scale in various services, outsourced, and things like that. However, I strongly believe that you lose your focus and your competitive advantage if you become too big.
On a vessel basis.
Yeah.
On the
I think
finance side, I think it's very clear that the bigger the better. It's better to raise equity. If you can go, you can do an IPO. It's better if you want to even raise debt, because banks consider diversification size as a big plus. Actually, Moody's, who does the rating in terms of risk rating, and their model, they have sectors where they sort of rate in terms of size. So one of the points is the actual size. In order to score the best rating, you have to have over 800 vessels. We were looking at the other day and we were laughing because, you know, it's no one, we look at Clarkson's and there's no one over 800 vessels in the world, but that's what Moody's sort of has in terms of grading it. And it does make sense. And it does make sense even if you look at it financially from a different perspective. If you want to try and do some hedging in the FFA market, again there you can match your risks better if you have a larger fleet and then you're sort of hedging on the paper trade than having a smaller fleet. So size does make a big difference in terms of finance and getting the capital required. I don't know if that's a good point or not, but it does. In real life,
that's very important because that's another unanswered issue, basically, because, okay. So I think time is pressing a little. Gladly to pick up on this after the session. We did all this, Jason, but not enough money to compensate first the capital providers and to return capital. Because basically on the capital providers, we have the rent, the interest rate, and principal payment. So let's call this liquidity. Okay, liquidity problems. If all these things we didn't work, and now you are the financier, and we say, Jason, liquidity problems.
Well, we've seen this all these years, which the market has sort of softened and had this downturn. Lots of companies have liquidity problems. Lots of companies have come initially with the breaking covenants of LTV. LTV, by some, was considered something very important, but basically what we saw in this crisis, it was just an alarm. I mean, we're now way past the alarm button being set off on LTV, so LTV is not an issue anymore. It's just liquidity the issue.
Yeah.
I think banks all over the world are acquainted with rescheduling principal payments. In some cases, they are keen also to give a holiday for payment, so you might be able to, if required, have a 12 months without actually repaying any capital back. In some extreme cases, we have seen interest also being sort of compromised in the way of some amount of interest is paid according to cash flow, but some is sort of deferred. So there's sort of kind of a...
Let me interrupt you, excuse me. When the ship entrepreneur comes into liquidity problem, let's make clear that the ship entrepreneur lost all his money. Equity zero. Because let's use an example, 15 millions, a vessel value, 5 mine, 10 yours. All right? When I come with a real liquidity problem, meaning the vessel will be 8, value of 8, meaning right there 5 million are gone for me, okay? So basically, is any justification, because to me, when I come to the bank and say, look, Jason, here's a problem, liquidity problem. Because right there, of course, the debt will force the equity, and the equity will force the debt, put the money first, but already the equity lost all the money. So right here, I think, of course, that's my perception, when we are resolving a liquidity problem, the equity holder is coming from the debt side, allow me the expression to say, supports to minimize losses from the debt side. Okay, because, for example, you say, Andreas, look, liquidity problems, auction the vessels. I can assure you, value of 8, auction proceeds 5. Not even mention what the ship owner can do to you. All right? And there are a lot of things can happen. A lot of things can happen, okay? Let's stop right here. So I will be very cautious, because you see, the conventional thought is, I'm going, banker here, okay? I'm going to my banker to ask him for. I will kind of change the approach. I'm going to the banker full of transparency, full of compliance, and say, look, Justin, I lost my money, let's minimize losses. I think, maybe as a professor I can say this, I think that's the approach that I will go. Are you going to listen to me?
Well, you just opened a very big issue right now.
Okay.
Just because you mentioned a few numbers,
Okay.
Just to say that a 10-year-old Panamax back in May of 2008 had the price tag of 76 million. Today, a 10-year-old Panamax has a price tag of 8 million. Just to realize.
So we're in the same bucket.
Banks were financing, even at conservative levels, say 50% finance on a 70-something, 76.
40 million.
40 million. You know, there's still a lot of debt there if the vessel costs today 8, or even less, because now she's not a 10-year-old.
The time is pressing.
You opened up a big issue. I think the key word here is trust.
Okay.
Is maintaining trust.
I tell you what, because we are reaching at the stage of excitement, and you know,
Take a break.
always there is timing when you get into a project, and there is the time when you get out. So I think the time is perfect to get out, because the excitement is on. Well, Jason, thank you. We'll make a short break. Stathis, thank you.
Thank you.
Dear audience, I do thank you. Mr. Organizer, thanks for the trust.